Hello, everyone. Welcome to our panel, Cryptocurrencies, Emergence of the Token Economy. Thank you very much for investing your time with us tonight. My name is Christopher Yang. I will be your panel moderator tonight. Before we get started, a little bit about myself. I'm an executive board member at TCA-LA and also the VP of Engineering at Corporate Travel Management. And for those unfamiliar with TCA, we are one of the most active angel investment group in the nation. Over the past 25 years, we've invested over 450 companies with a total investment of more than 250 million. And despite the COVID-19 pandemic, we had a record year in 2020. And last year, TCA invested in over 60 deals and provided around 20 million in startup funding. And really with 450 plus members across 4 chapters, TCA brings diverse expertise and critical business connection to our portfolio companies. As part of our 2021 initiative to educate and provide insights into the available opportunities in emerging markets and industries, TCA has been hosting a series of panel discussions like this one tonight. We'll be talking about the latest on blockchain, decentralized finance, and cryptocurrencies, including all the fusses about. Before we dive into the actual discussion, I'd like to take a few moments for each panelist to introduce himself and talk a little bit about their background in the industry. So to kick us off, why don't we start with Brinley?
I was hoping to follow along, but no, I'll go first. Happy to. My name is Brinley Lear. I'm general counsel over at C Labs. C Labs has been working on, along with the full decentralized community, working on a new platform called Celo that launched in April 2020. Celo is really one of the next generations of blockchains. It is a fork of Ethereum, but it has some I would say very meaningful upgrades, such as proof of stake. It's mobile first, and it's really designed to reach the 1.7 billion unbanked adults in the world, a way to use this technology to enable folks to use an inexpensive Android phone with limited connectivity and connect with these blockchains to do transactions. It also enables entrepreneurs around the world to build their products on Celo. Just a bit more, before I joined Celo, I was general counsel at Ripple, and I've been in the crypto space since 2016. So when I joined Ripple, and before that I was at PayPal and eBay. So a bit about me.
Thanks, Brinley. And we also have Dean joining us tonight. Dean, would you like to introduce yourself?
Yeah, thank you, Chris. Hi, everyone. My name is Dean Steinbeck. I am president and general counsel at Horizon Labs. So my background, I started in traditional big law, worked for Latham & Watkins. I was telling Brinley beforehand, graduated from UC Berkeley, so we have that in common. Worked in traditional VC-backed startups for a long time, and eventually in 2017, got the crypto bug, like a lot of people, I think, in our industry. And happened to go to a conference kind of like this and hear my now CEO giving the keynote presentation. Fell in love with the project. I think we're going to talk a little bit about that later on. It's called Horizon. And actually 3 weeks later, I had left my job as general counsel at a startup in Santa Monica and had joined the world of cryptocurrency. That was 2018, early 2018. In 2019, with my co-founders, launched Horizon Labs, which is a VC-backed for-profit startup in the crypto space. We're backed by Digital Currency Group, and our focus is really building proprietary zero-knowledge proving circuits that help secure the sidechain ecosystem in the Horizon blockchain, which I think hopefully we'll get a chance to talk about further. That's kind of my background.
Thanks a lot, Dean. And I'm very excited to have Dr. Jane Thompson zooming in from Australia. Jane, would you like to introduce yourself?
Thank you, and I apologize if my internet connection becomes unstable. But yeah, my name's Jane Thomason, and I've been working in blockchain and crypto since 2016. And I came at it actually from, I've spent 30 years working in emerging economies, in healthcare and women's empowerment and governance, and so had a deep understanding of a lot of the problems that people in those economies face. And when I started understanding about blockchain and realizing the numerous applications that it had to connect people in emerging markets to identity, to financial inclusion, to distributed energy, to supply chains for provenance of medicines, then I really got deeply engaged in supporting projects, reading, writing, following projects, and understanding what's going on in the whole area around blockchain and social impact. And it's been fascinating acceleration during the pandemic, of course, both with crypto and DeFi and NFTs. And I look forward to discussing that during the course of this panel.
Thanks a lot, Jane. And then coming up next, we have Josh. Josh, would you like to introduce yourself?
Okay. Hi, I'm Josh Jones. I went to Harvey Mudd College and I started the accelerator, HMC Inc. from it. While I was in college, I had started a web hosting company with some of my classmates. And so I like to say I was in crypto since 1996 because I tried to invent Bitcoin back then because we got a lot of chargebacks and credit card fraud. Like our first month of operation, we almost lost our merchant account. We wouldn't have been able to accept any sort of payment on the internet. And I was like, there needs to be a way like cash where there's no one in charge. Couldn't figure out how to do it. But in 2010, I heard about Bitcoin on Slashdot, I think. And I was like, someone figured it out. And I looked into it and got into it. And so I've done numerous Bitcoin Cash related things since 2010. And I'm actually, my current endeavor is I bought an airline in Alaska last year that went bankrupt because of COVID, and we relaunched it and it's doing well. And this week we're going to launch our frequent flyer program, and I'm going to make it a token because it seems like an obvious choice for a frequent flyer loyalty program. And anyway, I'm a programmer by trade and I live in LA and look forward to chatting some more. Thanks.
Thanks so much, Josh. Super excited to have you joining us tonight. And finally, we have Karan. Karan is also a TCA-LA member. Karan, the floor is yours.
Great, thank you, Chris, and great to be here. I'm a partner at Deloitte. Prior to this, I founded the cryptocurrency practice at KPMG, and I led that globally for 3 years. I bumped into Bitcoin in about 2016. So by trade, I'm a developer, a cybersecurity person. So while looking up some cryptography research on Reddit, I ran into Bitcoin, and just the idea of decentralizing trust was very appealing. So we spun up a practice, which got a lot of traction thanks to the 2017 bull market, and I did that for a while. And I've also been almost exclusively investing in this space. I'm one of those, who's out there probably. Almost 100% of my investments are alternate investments. So happy to chat, and a pleasure to be here.
Yeah, a pleasure having you tonight. To start off, Brindley, you've been working on a new blockchain Cielo for a while, right? Could you talk about the idea behind Cielo, its mission, and some of its core elements? What pain points does Cielo aim to address?
Yeah, absolutely. When I joined the project, it was really an idea. And can you hear me? I can't tell if my mute is off. Okay, great.
Yes,
it was an idea. It was around, a couple handfuls of people, really mid 2018. And the idea was, let's do a couple of things. One, this technology is really interesting in that it can reach people that have been traditionally outside of or historically outside of the financial system. Many of the points Jane made, I think, really animate what brought Cielo to life. But we didn't just look at the technology. It was really a process of doing some deep research. So we went to various places in the world, Argentina, Kenya, a refugee camp in Tanzania, to get this idea of what would be the base technology that would be useful to the most people in the world, right? And the Philippines, right? These are really different geographies with really different mobile devices, really different levels of connectivity, and different options in terms of banking-like services. So Celo really came from this base of real-world research on what people could use. And then from there, the technology was built. So it's a fork of Ethereum, but then upgraded. So it's really this mix from the very beginning of technology, but also the real world use of this technology and what is needed. Again, really looking at the 1.7 billion unbanked adults in the world, which is a huge number, and it's also an old number. And I would imagine after the pandemic, it's even higher.
Thank you, Brinley. So I want to switch over to Dean. So earlier you talked about Horizon as building a general purpose blockchain platform that supports an ecosystem of decentralized sidechains. Could you also briefly talk about what that is and what's important?
Yeah, of course. Thanks, Chris. So at Horizon, we're building a truly permissionless and decentralized platform that allows any third-party developer to deploy our SDK and launch their own blockchain. From an architectural perspective, it is a main chain side chain architecture. But this essentially the goal of what we're building is to abstract away the complexities of building and maintaining a blockchain so that any third-party developer can do it easily. These sidechains come out of the box proof of stake, and the entire system is secured and interoperable via our cross-chain transfer protocol, which is a little bit of that zero-knowledge proving circuit technology that I had mentioned earlier. So our goal is to be an infrastructure provider to thousands of different blockchains. These are independent blockchains, but they're tapping into the infrastructure of the Horizon blockchain, which is, as of today, roughly has roughly $1 billion market cap with its native token Zen, and our 45,000 nodes, which is, if not the largest, one of the largest node networks in the industry. So again, our goal is to help empower blockchain developers to have their own blockchains.
Thank you, Dean. So Jane, I guess as a blockchain social development thought leader, right, could you also talk about how crypto and blockchain democratize the financial market and help facilitate economic growth, particularly in developing countries today? Jane? Can you hear me okay? She probably lost her connection. We'll come back to Jane a little bit. Why don't we go to Josh? Yeah, Josh, you talk about your story. Yeah, you got into Bitcoin in 2010, right? And then soon after you started your own exchange, Bitcoin Builder, right? I've always been intrigued by your story. Do you mind sharing it with the folk here tonight, just in a bit more detail?
Sure. Yeah, so one of the things, well, I started a site called Bitcoin Builder. Basically, I got into Bitcoin as a merchant, from the merchant perspective of just no chargebacks, no fees was kind of like what I liked, no permission, right? And then, yeah. And so what I saw early on was that a lot of the services that were coming out that were doing things with Bitcoin I couldn't blame them, but they were charging huge fees because they were trying to make money. And my dog is barking. But so I realized they were all like high school kids. They were starting these like Bitcoin exchanges, charging 7% to buy Bitcoin and stuff. And I was like, this is killing the whole point. So I had this idea. I started Bitcoin Builder, where my idea was like, I will do these things and make them free just to make Bitcoin better and to build the ecosystem. And I will just buy a bunch of Bitcoin because I have some money from DreamHost. And then it's like I have equity in Bitcoin since there's a fixed supply. And then essentially I noticed Bitcoin was just taking off without me. So I kind of just ended up buying a bunch of Bitcoin and not really doing a ton of things. But I did use that Bitcoin Builder site. In 2014, I was doing some arbitrage in Mt. Gox. If anyone's familiar with that story, the first and biggest Bitcoin exchange was based in Japan. They had had some issues with the US government and KYC or whatever, money transmitter licenses, and weren't able to really withdraw US dollars to the US. And so there was this huge spread between the price on Mt. Gox and other exchanges because you could only withdraw money in Japan via yen. And it's kind of hard to get a Japanese bank account. You have to be a resident, a permanent resident, or a citizen. And fortunately, my sister lived in Japan, and a friend of mine had a Japanese bank account. So I had set up this arbitrage I was doing where I would buy Bitcoin at Bitstamp, send it to Mt. Gox, sell it for like 10% more, withdraw it via yen, wire the yen back to the US, then wire the US dollars back. And it was working, and I knew that people were like, Mt. Gox is insolvent, everything is shady over there. And then in February of 2014, they froze Bitcoin withdrawals. So you couldn't withdraw US dollars before, but you could withdraw yen and you could withdraw Bitcoin. But they froze Bitcoin withdrawals because of this issue they claimed about transaction malleability, where somebody was able to sort of trick them into withdrawing twice, and they were losing some money. But then other exchanges like Bitstamp also said, oh, shoot, we have transaction malleability issues. And a lot of exchanges had the same issue. So most everyone figured Mt. Gox is going to be fine. And but they had frozen withdrawals. And I saw people on a forum, Bitcoin Talk, starting to trade Mt. Gox Bitcoins, we called them, for real Bitcoins, because you could still move Mt. Gox Bitcoins internally. So if I had a Mt. Gox account and you had a Mt. Gox account, you could send them to each other without it really hitting the blockchain. And so I saw people trading over a forum, and I was like, hey, basically I had almost invested in Coinbase in their seed round, but I had never done any angel investing before I was like, I don't know, I'll just buy Bitcoin. And I had really regretted that ever since I tried to invest in a lot of exchanges. And I was like, I should really have my own exchange. And I didn't, but it's hard to get a banking license and everything. And so I realized I could actually write an exchange because Mt. Gox had an API, and I used the Coinbase API for the real Bitcoin side. And so I made an exchange that was between Bitcoin and Mt. Gox Bitcoin. So it was just a ratio from 0 to 1 and somewhere in there. And it started off trading at like 0.95, I think, real Bitcoin per Mt. Gox Bitcoin. I had the idea on a Friday. I launched it on a Monday. I charged 2% on every trade on each side. I think I made about $65 the first day. I just posted in that forum and said, hey, I'm the guy who started DreamHost, and I'm into Bitcoin, and I made this exchange so you don't have to mess around with this forum. And then it just kind of was like the perfect hockey stick growth. Within 2 weeks, it was only 2 weeks, because then it turned out Mt. Gox was insolvent and had been hacked over a long time and was hiding it for years, and had no money. Although a few weeks later found out they had about 23% of the money. I don't know what the volume was, but for a while I had more Bitcoin, I had more volume than Mt. Gox and Bitstamp. Going through Bitcoin Builder. It was the biggest Bitcoin exchange in the world for like 3 days. And I think I made like $500,000 in fees on that last Monday when then Mt. Gox shut down. And so now I'm the biggest creditor to the Mt. Gox bankruptcy, which should be wrapping up in the next 18 months or so, after a good 7.5-year run of Japanese bankruptcy court. So that's my main Bitcoin thing I've been doing since then.
Oh, wonderful. Thanks for the story, Josh. And I think we have Jane back online. Jane, can you hear us now? Just want to make sure.
I can, thank you.
Yeah, I'm not sure how much of the question did you catch earlier. So I was asking whether you could talk about crypto and blockchain, how they help democratize the financial market and facilitate economic growth in developing countries.
Yeah. Sorry, go ahead.
Yeah. So do you think you could help shed some light and maybe talk about some of your research in that area as well?
Yeah, absolutely. Well, personally, I think that emerging markets are the most important impact markets for blockchain and crypto. And one of the things people might not know is that We Are Social 2020 has published the proportion of the population who own crypto wallets, and the top 10 countries are all emerging economies. So it's Nigeria and Indonesia and Brazil and India and South Africa, which shows to me the importance of the engagement with blockchain and cryptocurrencies in these countries. In particular, during the pandemic, it actually became more important for a number of reasons. One was just simply being able to send remittances home, because a lot of the cash shops and the physical locations where people previously exchanged money were shut. And so sending through crypto remittance providers was on the rise. In addition to that, you had small micro entrepreneurs who bought things overseas like Netflix and Spotify cards and sold them in the villages for their business. The cash shops were shut down, and so they turned to crypto for their foreign exchange. Another thing that we saw increasing was that people simply started, because they were home all day, playing on the crypto markets, and even more fascinatingly, playing games where they could make money. So some of you might have seen the Axie Infinity video that came out a few weeks ago about the Philippines, where a whole community in the Philippines have kept themselves out of poverty by playing Axie Infinity, trading NFTs and making money out of that, even to the extent that people were subcontracting out their Axies for other people to play so that they could earn money. So some of these things are kind of unexpected, but really interesting, because what I think it shows us is that in emerging markets, people have real problems to solve, and they're seeing how crypto can solve those problems. And then in addition, everyone would have heard the sort of well-publicized declarations in South America about having Bitcoin declared as national currencies and so forth. So we've seen a lot of movement around blockchain and crypto during the pandemic. But I think, and Brinley, I saw Cello for the first time actually in Africa. So, you know, you're absolutely in the right place, and it's being used in ways that enable people to be able to do things that solve their problems. So other projects that, you know, I'm seeing at the moment that I think are really interesting are things like the work of Sophie Blackstead and Hived Online. And they're working in Niger, which is one of the poorest and most difficult countries in the world, digitizing women's cooperatives and creating alternatives credit scores for women using blockchain, because that people who are unbanked also can't get credit. Although I personally argue that there's no need to use the term unbanked anymore, because if you can have a digital wallet, you don't need a bank account. So we're seeing a lot of innovation going on in emerging markets around crypto. But the other projects that I just want to highlight here are things like Electronium and Good Dollar. And Electronium was designed to be a sort of low-cost crypto for the masses, and they have more than 4 million wallets downloaded in emerging economies. And then they started allowing people to exchange mobile credit for their ETNs and so forth. So they're making things accessible to people who normally don't have money, and they've now developed a marketplace for people called AnyTask to sell whatever they can sell, but with much lower costs than the traditional providers. So finally, what I want to highlight, and not to sort of hog the limelight, although it's all very exciting, is just also the importance of blockchain and digital assets in humanitarian settings, which have probably innovated faster than anyone else, because they're sort of constantly in crisis, as opposed to the pandemic crisis, which is a once in 100 years. So I think we're seeing some of the fastest adopters around blockchain and crypto, and probably the World Food Programme Building Blocks is one of the better known of those. But there's a lot of innovation going on in the humanitarian sector, and there's recently been a report on blockchains for humanitarian, and a coalition between Red Cross, Mercy Corps, Hived Online and Oxfam are looking at building a sort of humanitarian stablecoin for really rapid response in humanitarian settings.
Thanks a lot, Jane. Thanks for sharing all the great insight, especially from a social impact and humanitarian perspective, right? I also want to pick Karan's brain as well, right? He's done a lot of research in terms of crypto institutionalization. So crypto's future success really very much depends on institutionalization, a necessary step for creating trust and scale. So Karan, as a leader in crypto asset service, you've done significant research in this area already. Could you talk about some of the key challenges facing crypto institutionalization and ways to overcome them? Thank you.
Yeah, happy to. Institutionalization is obviously a mouthful, but the idea is about facilitating the flow of capital at scale. And if you really think about it, capital is really at the center of all of this, right? If you think about 1999 to 2001, there was an excess amount of capital that flowed in, created companies like Amazon, Google, capital went out, but innovation stayed. And the same thing's happening here in 2017, it's happening again. I mean, we just heard some wonderful blockchain applications. All of these are really enabled by the capital and talent that flows. And what institutionalization is the idea of creating and facilitating infrastructure which supports the flow of that capital. And I come from a financial services background. For those of you who have a similar background, some of this may sound familiar. But when I think about sort of the top challenges in this space, it's still a fairly immature asset class and space. Yes, it's worth 800 billion or 1 trillion or whatever it is right now as a collective asset class, but the infrastructure is still fairly immature. A couple of examples. So I think maybe 3 or 4 weeks ago, when there was a big Bitcoin crash, the spreads on the market were about $4,000 to $5,000 at one point. I mean, that's ridiculous, right? Think about $1 trillion assets like Apple and Amazon. You will never see 4 to 5% spreads on these types of markets. What that tells me is that the infrastructure in this space still needs to mature. It's come a long way. Don't get me wrong. It's come a long way since 2016. Probably even longer since what Josh has seen back in the day when collective Bitcoins were another sort of peer-to-peer transactions were happening. So that's sort of one area. The second one I would pick is regulatory certainty. This is important because I hear a lot about decentralization. I get the idea, but for meaningful amount of capital to flow, people are looking for regulatory certainty, some kind of recourse, where they can, etc. To me, last year, 2020, provided a lot of regulatory certainties, at least in the U.S. market, and that really facilitated the bull market that we saw. Brian Brooks, who kind of led everything he did with the OCC, and prior to that with Coinbase, has done a fantastic job. In fact, I wrote a paper on this topic with Coinbase in 2018 about how all of these different moving parts sort of come together. But there's still a lot of work to be done. That now we're hearing chatter about some of the OCC rulings being potentially rolled back. There's debate about that, so that could undo some of that, right? But therein lies regulatory uncertainty, which is problematic. There's also a little bit of a narrative problem. Crypto as a whole is still referred to as a monolithic sort of space, whereas Bitcoin is really trying to be a digital gold or a store of value. It's not trying to be money. Maybe in El Salvador, it's potentially legal tender. So the whole narrative kind of needs to be clear. And Ethereum is trying to be an interest-bearing asset. It's trying to be a consumable commodity. It's trying to be a store of value. So the narrative on some of these topics has to kind of move on a little bit more. So there is regulatory uncertainty, and when a country like El Salvador calls it legal tender, Bitcoin is, in my view, it's kind of flying really close to the sun suddenly. That's going to have some legal implications or ramifications because you're now trying to be money. And guess how that's going to fly with U.S. regulators and other countries where their respective currencies are extremely strong. So that's something to think about. And the third sort of challenge or space I always watch, also selfishly, is cybersecurity. I think Bitcoin's been around for what, 11 years? I want to say it has somewhat stood the test of time. It is a secure blockchain. The Colonial Pipeline hack in the last couple of weeks has been interesting. I'm watching to see exactly how the FBI got a hold of the private key. I don't think it sacrificed the underlying integrity of the blockchain. If it did, we'd know by now. But the fact that they were able to do that using layer 1 tools, machine learning, etc., it tells me that there is something about security to watch, sort of in that space. And those would be the 3 top challenges I would think about as we move forward.
Awesome, thanks, Gaurav. So in the next half, I'll kick off the conversation by asking a few questions, hopefully to draw out some really high-level discussion points for all the panelists here tonight. So the rest of the question will be addressed to everyone on the panel. So first, I would like to ask something related. Since we're on this topic of institutionalization, with more and more institution investors piling into crypto, in your view, how important is digital asset custody? What are some of the key factors one should be considering when evaluating a custodial solution? Does anyone want to take that?
I can sort of continue with a train of thought on that. So I do think it's extremely important. And as I said before, when you're looking to park meaningful amounts of capital and you're used to a certain white glove service with that type of capital in traditional financial assets, you'll be looking for similar solutions in the digital asset custody space, and that's why it's important. To me, digital asset custody, just like Bank of New York Mellon or State Street, is so critical and central to traditional finance. The new custodians of the future are going to be important here. The things I would look for are trust, more than anything. Do I trust this company, this entity, their registrations, their licenses? I would definitely look into security very closely because remember, there is no recourse here. Josh probably knows this all too well, but once the asset leaves the address, you're done. There is no Fed wire that you can call and try to put a hold on. You're done. So security is going to be big. And the third one is probably the exact type of solution that I need for my for my needs. If I need to actively trade my assets, I probably don't want to park my currency in a cold wallet in the Swiss mountains. I need some kind of a hotter or warmer connection. So that the specific type of solution to me is important. So my 2 cents on that.
Just to chime in, agree that it's really important for the evolution and the maturity of the space, no question. Just one other aspect, I think we have seen tremendous innovation just in the last 2 years in terms of custody solutions and the quality of custody solutions, both in terms of thinking about base layer security, but also usability. So one custodian I like especially is Anchorage. I like how they have really thought about the whole picture and they've really thought about, convenience. So it pays attention to your voice, whether your voice is in stress when you ask to move assets. It looks at your location. It looks at all of these things before you move assets, and it's convenient and it's accessible through a mobile device. So I think big picture there is just tremendous innovation in the last couple of years.
Yeah, this is Dean. I would just jump in and say that I agree that the industry has improved significantly and is improving significantly every year with respect to institutional grade custodians, both or in the full spectrum of what that means. So security, service, insurance, right? We're starting to actually get insured custodians. So I think some of the tracks are being laid that Kieran referred to earlier as to what we would need to be institutionalized, and having regulated and secure custodians is obviously a major part of that. But I would say it's a process. And so, we're not at the level of, let's say, traditional US securities as an example, because we're such a young industry. But the growth that I've seen just since 2017 till now is like exponential. If you were to go back 4 years, I don't think Fireblocks existed. I don't think Copper existed. I don't think Genesis Custody existed. I think all of these are new services that have improved upon the earlier versions. So my two cents.
Excellent. So I guess, Josh, how are you storing your private keys today? Do you have a view on this, by chance?
Yeah, I mean, everyone always says, not your keys, not your whatever crypto, but like, no point. Like, unless you're like a really illegal person, like, I don't know, it's not worth it. Like, it's funny watching since 2010. It's just the reinvention of the financial system, just going through it's the Wild West, and they're like, oh shoot, maybe we should have insurance, maybe we should have banks that hold this, maybe people would want to borrow against their assets. Sometimes it's all just like, it's like, yep. It's the same. And really, I mean, you can think of every, at first I was I was like, why would anybody want another crypto? Like we would just use Bitcoin and fix, add things to Bitcoin. And then whether they were copies or forks or new things, and like Ethereum came out of, he was going to use Bitcoin, but seemed like it was too hard to work with them, easier to just start your own. It's just, think of them as startups, and every crypto is like, if you're trying to choose one or something, like it's just like startup, you're just betting on people. Like there's no real smart contract. Someone's gonna write the perfect smart contract that's just gonna be the thing. It's like, there's still the FBI, there's still government, there's still people programming, there's still a group of open source developers in a chat room deciding that they want to roll back the smart contract, and they're going to talk to all the miners. And it's really just like, do you like the Satoshi coin, or do you like the Vitalik coin, or do you like the Craig Wright coin, or do you like the, Ripple Corporation coin, or do you like the, the people at Horizon, or the people at so I don't know. It's just like a microcosm of everything that already has gone through. So I don't think there's there's cool stuff in terms of really small amounts, having your own wallet and like, paying for a web hosting company, bill where you don't have to worry about it getting charged back or getting approved. So now with the airline, I couldn't believe it again. Airlines have a hard time getting merchant accounts, yeah, because they get a lot of sort of disputes because of cancellation flight, flights getting canceled, people wanting to change their booking. And then also because they go bankrupt a lot and then take with it all these prepaid, oh wait, what happens to the flight I bought for November now that my airline went bankrupt? And they're like, Visa pays you back. And so it's almost impossible to get a merchant account as an airline until you have a huge track record, and you need a huge holdback with a merchant account. So all that stuff, but even in that case, like if, we're going to start accepting crypto and doing our thing, I'm like, yeah, we probably just want to use, Anchorage or something, especially because we're based in Anchorage. So.
Well, great discussion, everyone. And so moving on, I guess the next question is around like investment risk, right? So what are some key issues facing the future of crypto asset, right? What advice would you give to investor for mitigating both like technology and operation risk? So does anyone want to go first?
I can keep going. We'll do it like that.
Oh.
You laugh, you can we'll flip back and forth, rotate through. I don't know, when people, it's funny because since 2010, I was telling people, oh, I'm doing Bitcoin's crazy, it's so interesting. And then they'd be like, should I buy some? And I'd be like, well, I don't know. I mean, I am, but it's pretty risky. But I would, dollar cost averaging is the way to go. I want to actually run the analysis at some point, but I think even if you buy at the peak, because most people do, they get into it and, they get really excited about it in late 2013. They get really excited about it in late 2017. They get really excited about it in early 2021. And then they don't care about it when it drops 90% and sits there for a year or two. But I think even if you always got in at the peak, if you dollar cost average, I'm pretty sure with just Bitcoin as the proxy for all crypto, you're going to be back. You'll at least be positive within 6 months, and you'll be, or break even, definitely not more than a year. With how volatile, and the more volatile something is, sort of the better it is for dollar cost averaging, because you buy much less when the price is high and much more when the price is low. And even if it never goes anywhere and just goes back and forth forever, whenever it's in the middle, you'll be ahead because your average cost is going to be much lower than the average price because you're buying more. So you're weighted on the cheaper prices. And that's sort of the magic of dollar cost averaging. So, my other advice is to really just buy things and hold them for 10 years and don't do any trading or anything. So you really try and figure out if what you think is going to be big in 10 years. And maybe get a few of those things, because when you see the charts, they look the same. They're all fractal, right? If you look at the 1 hour view or you look at the 10-year view, they look the same, except that the y-axis on the 10-year view is like 1 billion% instead of like 100%. So you get one day trade right, you're like, woo! But you get one decade trade right, you're done. Like you retire. So just look for decade trades and, have 3 or 4 going at a time, and hold it for 10 years and see. But yeah, in terms of which ones it's just like betting on a startup or anything. It's just the people, and it's really there's no technology difference between any of these coins, in my opinion. Not really. It's how is the story, and are the people like putting out new stuff and building partnerships and doing the thing, and are other ones just kind of sitting back and hoping their great programming wins the day. That's my take.
Thanks, Josh.
Yeah.
I guess, Dean, yeah, go for
Yeah, I
it.
was just gonna say,
Yeah.
is it too simple to say buy low, sell high? Is this more sophisticated than that? No. So I agree with Josh on a lot of his points. Although, so I'm caveat worst trader, so no trading advice or anything like that. But I do believe that there are actually significant differences between the projects and the technologies. And so it's really important. So for example, if you're going to buy Dogecoin versus Horizon or Cello or a number of other projects, you really should at least know why you're buying it and what your investment thesis is. Is it that you're buying it because you believe Dogecoin is going to be the future of money? Great, if that's your thesis, congratulations. Or are you looking for technology plays, in which case it's very much like what Josh said, which is this is a startup and there are lots of different startups. But I would caveat that with, of the probably 10,000 coins listed on CoinMarketCap, 80% plus might not be here in 5 years, or they're just ghost projects. And so if you're not really involved and understanding what you're investing in, then my advice would be to, not go big into those kinds of markets.
I think I agree. I mean, just like startups, right? Like 80–90% of them aren't going to be here in 5 years. But I think the thing is that like, it's almost impossible to predict. Like, it's just like startups too, it's timing, it's just luck, it's some combination. It's not like you can just go and like, this is the best technology, so this one's going to win, right? It's almost irrelevant. Like literally Doge, that would be a winner. Like you bought Doge when it came out. At this point, you'd say, yeah, that was one of the ones, even though it was a joke meme coin. So it's not, I'd say there's a lot of dimensions to analyze, and they're not things that you can really analyze. Exactly.
A lot of dimensions to analyze, but also just picking up on one of the threads of engagement. This asset class is really different. It's not a security. Most are not securities for a reason, and that is because they're not passive. There's so much more that you do with these assets. You have a voice in the governance of the platform depending on that asset that you're buying, or you're staking it and earning rewards. So it's a really different asset class, and I think that's important to consider, right? It's not like buying an equity in a company in many ways, I think, because of those decentralized aspects and other characteristics.
Maybe I'll add a couple of things. Obviously, I won't provide any investment advice. I have to say that. But there are two ways you can get yourself exposure to this. There is the direct asset, right, which I think Dean, Josh, and Brindley talked about. But also think about the companies and the infrastructure which you could invest in. I mean, quite honestly, the biggest value proven business at this point is Coinbase. It's what, $50–60 billion. It's in the public markets. Whoever invested on early as an infrastructure play killed it. No matter which way the underlying coins and currencies went, the infrastructure play always stays. So think about sort of the infrastructure and the enabling companies as well, and how you could, if you're looking for exposure in the space, and how you could sort of park capital there. And one other thing I'd say, in 2018, I remember the bear market was brutal. People were building projects. There was a lot of progress being made, but that didn't stop Bitcoin and all the other assets from returning to a higher, but a fairly low number. And I remember Ethereum from its top, $2,000 per coin, went down to $100 a coin. That's the kind of insane drop, that it had. If hindsight is 20/20, but if buying at 100 is way different than buying at 800, right? What you can afford and what you probably return for yourself is also very significantly different. So I think entry points extremely important in this space. Is something to consider. And in terms of, again, exposure, the assets one thing, but also don't forget the infrastructure and the businesses around it.
Awesome.
Yeah, I forgot to mention that. Yeah, because I ran an exchange for 2 weeks, and you quickly go from watching the yellow line to the blue bars. You're just like, volatility, volume, up or down, I don't care. More trading. So it's good to get into, and those are real companies that are actually run by people who can, well, okay, they can add Horizon support, they can switch to Bitcoin Cash, or they can do, you're not riding this one horse and doing all the trading yourself. You're really betting on the team in the case of a actual, like an exchange or some kind of, crypto mining company or whatever.
Awesome. Yeah. It's a great discussion again. So I'm going to move on to the next question that's somewhat related. We have a new administration, or not so new anymore. That's it's currently reviewing policy gaps and potentially call for stricter regulations of crypto economy, right? So how do crypto investor and entrepreneurs cope with the inherent regulatory uncertainty, and what changes do you foresee? And I think, Bradley, you've done a lot of research of being general counsel at TCA-LA, right? And perhaps maybe I'll start from you first.
I mean, I think a couple of things. One, it isn't unusual for regulation to substantially trail new development. I mean, in that respect, it's just not new. If we go back to the credit markets, when retail credit was just becoming a thing in the 60s, it took about 15 years to have regulation around it. I probably have the numbers wrong, but the 15 years is solid, right? It takes time for the regulation to catch up. Big picture, I'm very encouraged with Chair Gensler being the head of the SEC. I think he is extremely knowledgeable on the technology. I think he understands that this is something that is really innovative and can be encouraged in a way that is responsible, but we need to have responsible innovation. Do we have clear regulatory certainty? No, but this is a developing technology, but I'm encouraged by some of these changes. So that's just cursory, and maybe Dean, you have some thoughts on this too, as my fellow lawyer on the panel.
Yeah, no, I agree with you actually. So I think that we are far along on that arc to regulatory certainty. I mean, much further along than we were 3 years ago, right? So it's really incredible how far we've come. And I think regardless of which administration, which president had won, the key is that as new people are coming into positions of power and to regulate the industry, they've had, a significant period of time where they've been educated on crypto. So whoever is going to be the next chairman of the SEC or the CFTC or wherever it is going to understand crypto at a very high level, certainly much more than if you go back 5-10 years where it was such a new asset class, nobody even knew what it was. So I think with time, this is kind of like the institutionalization of the entire industry. I think we're on an arc to regulatory certainty, and I think it will only get better with time as people become more and more comfortable with crypto. And that's not a Republican or a Democrat thing. It's just simply a sophistication that comes with time.
Right. And with that sophistication, oh, please go ahead, Jane.
No, go ahead. You finish, and then I'll chip in from a global point of view.
One thing about Chair Gensler, who is heading the SEC, I mean, it's not even just theoretical that he understands. You can go online and watch some of his class from a year or so ago at MIT. He deeply understands not only the technology, but of course the financial markets, because he's been at the CFTC, he's been at Goldman Sachs. He understands sort of the evolution of financial markets and what new technology can do. So I think he has a really sophisticated view of how to think about this technology. And that, to me, I find really encouraging. And to your point, Dean, that's something that we didn't have before because this industry was still evolving. So Jane, please.
Yeah, thanks. I just wanted to kind of chip in from a bit more of a global point of view, because I think what we've seen around the world is various reactions to crypto, from trying to shut it down and ban it, to smaller jurisdictions going, yeah, we're going to welcome this in, we're going to do crypto regulations, come and register with us, all you crypto companies and exchanges. So it's quite wide ranging how people are dealing with it, but we've got a lot of movement around with the EU with their MiCA regulations and FATF and others who are all trying to come up with some kind of global set of regulations. A couple of points that I wanted to make. One was, I think we all need to work on some kind of taxonomy or globally accepted classification of tokens. And I think industry's got to come to the table with this. And I'll just highlight for some of you who may not have seen the Global Blockchain Convergence, which again is a voluntary industry group that's just come up with something called the Sensible Token Classification System, because of course not all tokens are financial instruments and should not be regulated by the financial bodies, and anything can be digitized. So actually trying to understand the different kinds of tokens, from physical asset tokens, services tokens, intangible asset tokens, native DLT and stable coins, is a really fundamental part of understanding, should it be regulated, who should regulate, and how should it be regulated. The second point I wanted to make, and you said that too, Brinley, which is the regulators are always doing catch up. And so in an industry like this, which is really experimental and new, industry needs to be reaching out to regulators and helping to educate them and helping them to think about reasonable ways to regulate the industry. But I think the underlying message for all of us is particularly related to anything that is financially regulated. It will be regulated, and people should be thinking and building with that in mind.
All right, Karan, do you have anything to add to this discussion?
Yeah, maybe one point. If I put my sort of crystal ball on, and Ray Dalio made this point really well. So he said, I think Bitcoin's success is its biggest risk, or something to that effect. If you really think about it, if this thing becomes big enough, I could see sort of a coordinated global response coming. This doesn't mean that every country in the world is going to get on the same page, but perhaps the major economies with a certain level of stability in their currency, I could see them getting on with some kind of a coordinated response, and that's not a bad thing. I think that's in the end that is also going to be seen as a good thing for a use case like digital gold as Bitcoin is going for.
Awesome. Seen some lively discussion going like offline via messages. I mean, all the panels has been very kind in terms of addressing some of the questions via text. Thank you for doing that. And I'm gonna move on to the next panel question. Many people have talked about CBDC, central bank digital currency, being the next big disruptor, right? Could it be a competitive threat to decentralized cryptocurrencies? Kind of want to get your thoughts on that.
Well, I'm happy to start off, and others
Awesome.
can chip in. I mean, I think the first thing is that there's over 40 central banks who are either already implementing CBDCs or looking at how they should implement CBDCs, including yesterday the Bank of England released something. I think that a couple of points need to be made. One is they're not all the same thing. And so, CBDC, as you might speak about it with the sand dollar in the Eastern Caribbean, is not going to be the same as the Chinese digital yuan. And on the point of the Chinese digital yuan, I think that the big issue is that that's already being rolled out throughout China, and then if they roll that out through the 60 Belt and Road countries, which is an entirely plausible scenario, it actually potentially is going to unseat the entire global economic system that's based on denominated on the US dollar. So I think the threats are bigger than the crypto community, the threat and decentralization. The threats are really the global financial system.
So I'll just jump in and just to give a sort of a counterpoint, which may or may not be accurate, but I feel like the fundamental purpose of cryptocurrencies and why it was created was decentralization plays such a key role. So there seems to be a conflict between a centralized government issuing a token versus the concept of a decentralized cryptocurrency. And so I haven't dug into government issued tokens in great detail. So perhaps there is some plan for decentralization. Perhaps there's some plan for why the digital dollar or pound is different from an actual physical dollar or pound, and why that just won't be inflated away. But I think at the core, the reason why crypto exploded was because it was decentralized and couldn't be inflated away. And so I'm not sure that people are using crypto for the technology so much as, or at least when it was launched, Bitcoin was launched as a peer-to-peer electronic exchange of money. It has grown into other things, admittedly, but it was never just meant to be a technological tool for governments to better process their currency. So I'm not convinced that government issued digital currencies will be popular. I do think things like stable coins have had tremendous success and have helped the markets in particular and investors be able to hedge risk. But I think the reason why Bitcoin exploded, the reason why it's the largest and most popular cryptocurrency is because of its very nature, which is decentralization.
Yeah, I'd say I agree with Dean. I think CBDCs aren't necessarily competing directly with, again, when we refer to cryptocurrencies as a monolith, which is a problem, but it's not directly competing with the censorship-resistant, decentralized type of assets, which are stores of value. I do think the two can absolutely coexist. If the CBDCs come up with the CBDC dollar or what have you, it'll serve its purpose. It'll probably natively digitize the dollar, and that'll open commerce fairly significantly. It'll change payments. It may take out some of the payments-focused use cases within cryptocurrency, but where censorship resistance and decentralization was the reason certain assets took off, to Dean's point, it's not even competing with that. I think people definitely see through that point at this point.
Yeah, it'd be
And
more like
I think there
PayPal.
are benefits to this technology, even if it's, oh, sorry, go ahead.
Sorry, I was just saying, I was referencing, I was like, more like competitor to PayPal. Go ahead.
I think there are technology benefits to moving to, even if it's more of a centralized system, right? The visibility that a central bank would have over the currency is just far greater than they would see with cash or other things as it circulates. And that becomes really interesting if you want to more finely tweak what your monetary policies are. So I think to Jane's point, I think there are so many possibilities of how a central bank could adopt, use, be informed by this technology. We're just at the beginning of that.
And
Yeah.
I would just add one last piece, sorry, Josh, is that if you gave me the choice of holding a US government issued digital dollar versus USDT, so USD Tether, I'd rather hold the US government's version of the dollar because it's just cutting out an unnecessary intermediary that may or may not actually have US dollars. So I think it does eliminate those stablecoin providers who are just simply middlemen holding US dollars in a bank.
Yeah, if it was the real, US Gov USDC or whatever, that would be probably just destroy the rest of the stable coins immediately. I do think it'd be cool that if there were a government that went straight crypto, they could do, I think it would help for like stuff like doing payments to all your citizens, like when there's a pandemic or something like that. If there's some kind of tied into a pretty good digital identity thing, just being able to do a universal basic income on there or something like that. And then you could even build in like a sales tax, a VAT, just like every transaction, like 5% goes back to this address that's the government or something like that. And that would be sort of interesting things they could do. But I don't think any government's even close to considering anything like that.
But to Jane's point earlier, I think we're seeing aid organizations and other non-NGOs and non-government organizations really using some of this technology. So that's, that only informs what central banks might do. So for many of the things that you just specified in terms of relief payments and other things, that's happening right now, which is really exciting. And what I think finally brings to life the possibilities of what we thought this technology could do as a peer-to-peer system back in, back when Bitcoin was created. So I think we're actually seeing it.
So on that note, then, what would the role of traditional financial system be in the future, right? Would it decline with the rise of crypto or CBDC? If so, I mean, how soon do you feel this crypto banking will go mainstream? I mean, just kind of add on top of that, build on top of that.
I can keep going with that because I think, you know, I think about this industry and the development and growth as a competitive discipline to our existing system. I don't think that it's going to replace it, but I do think that there are inefficiencies in our current system. Transaction fees are very, very high. That used to be necessary because it took real people to move money and phone calls and various things. If we can solve that with technology, the transaction fee should be much lower. But without competition, like any market, without competition, the fees are not going to come down. So I see one of the main you know, an important pillar of this technology is that competitive discipline. So that's where I would start.
Yeah,
And maybe I could add, sorry, go ahead. I'll go after you.
Okay, sure. Thanks, Jane. So I'd say it will, decline is a strong word, but there is market share that's going to be taken away from it. For example, right now, all the money and capital that's invested in crypto is probably not earning management fee and commission in some brokerage account for some bank. So that's market share that's already taken away. DeFi is an extremely interesting space that I'm very, decentralized finance is something I'm watching closely. The idea of creating code which serves as a smart contract or a de facto bank to sort of combine borrowers and lenders is brilliant. That's the function of a bank. Now it's not been proven at scale. There's a lot of things that needs to change, and you could argue once that this thing becomes big enough, the regulators are going to try and step in. Who are they going to regulate though is a whole other question. But I do think if DeFi starts to become big, the promise of DeFi could significantly take away more and more market share from traditional finance.
Yeah, and that was the point that I wanted to come in on, and I completely agree with you. But, you know, the DeFi's escalated to over $70 billion in about a year, and the number of DeFi projects are just rapidly escalating. And what it allows people to is the small guy to be able to earn money on his crypto if he invests it into these DeFi pairs. And so it really is democratizing finance in a way, and it allows pretty much all of the traditional banking functions to be decentralized. So right at the moment, there's no doubt it's Wild West. And if you follow the Rec newsletter every week, you're reading about, you know, major crashes or scams that have taken place, you know, within the DeFi ecosystem. But I think, as you say, we're seeing tremendous innovation. And as traditional finance realize what's going on, I think the question is whether they'll move into DeFi or whether they'll pay a lot of money to buy some of the DeFi companies. But I think we're going to see some kind of relationship merging between the kind of crypto people who've come at DeFi and the traditional finance people, seeing what it's doing and, as you say, competing with them and taking their market share. On the regulation thing, I completely agree with you. The challenge for the regulators is, of course, a lot of these DeFis are governed by DAOs, and how you regulate a DAO is a new challenge for regulators that they're going to have to work out. But I'm sure they're going to be coming for DeFi without doubt.
Yeah, and if I can add, I do think I guess there was a question about where to invest. I would absolutely pay attention to DeFi and everything that's going on. I think that's the current pivot in this space, which is going to mature more. DeFi is also an interesting topic. You know, one thing I'd say is there are certain forms of traditional finance which are going to need intermediaries, right? So take your mortgage process. If you go the DeFi route and code governs everything, who are you going to evict if somebody doesn't make the payment? Like, who's going to go after them, and who's going to judge your credit worthiness? So there are certain types of finance which are probably going to remain traditional, if you will. You may use a blockchain underneath. It's not going to make it DeFi, but for it to be truly DeFi, there really should not be any intermediaries, and the code needs to be the king.
Yeah, that's exactly right. And so you're regulating smart contracts. or auditing them, which is what's going on with a lot of the DeFi projects now as people do their due diligence.
Yeah, so I would just jump in and say, oh, sorry, whoever I cut off, apologies. So I absolutely love DeFi. I do believe that it will take away significant market share from traditional finance over time. So just like you see Coinbase is an exchange, a centralized exchange offering cryptocurrencies. I know it's relatively small in comparison to Charles Schwab or JP Morgan or other security brokers, but you can see there it is, and it's taken a small piece away from traditional finance. I think what's happening in DeFi is that times 1,000. It's absolutely incredible. If you aren't familiar with what it is and how to do it, I really would recommend that you learn, because it takes a little bit of a learning curve to learn, but once you see it and you see the potential, it's really revolutionary. I think we're still so far away from having a developed DeFi industry. So, it took a long time for an entity like Coinbase to succeed. I think it's going to be a long time before the Uniswaps or the Sushi Swaps or the other DeFi platforms have that kind of mainstream success, but it will happen. And with respect to regulation, believe it or not, most of the decentralized projects aren't as decentralized as you might suspect. Just as an example, Uniswap in their latest V3 actually took steps to prevent tokens that had been subject to SEC action from trading. And so I'm not, for or against that per se, but it just highlights the fact that it's not as decentralized as you might think. And there are real people behind these projects who don't want to be arrested and go to jail. So I think that regulation will come. I think that the largest DeFi players will follow the same playbook that Ripple and Coinbase and others have, which is to hire every ex-regulator on the planet who needs a job into your organization. And so you just have it becomes one and the same with traditional finance and government entities. But I think that's the path that we're on.
And if I can just pick on that, Gene, that's a really important point. There's a lot of projects which aren't really truly decentralized. And if you're not truly decentralized and you become big enough, regulation is going to come and eat you. And guess what? Your cost of capital, your cost of financial services is going to go up. You're no longer differentiated from traditional finance. I'm just going to go to JP Morgan Chase to get my mortgage because you're not offering me anything more. So the true decentralization is still sort of in its infancy. There, like I said, you can put some collateral, get a loan on it and then buy more coins. That's decentralized. But there are all of these other use cases that are being experimented with. I wouldn't call it decentralized finance yet.
Thank you, everyone. It's great insight from all the panelists tonight. I do have one last panel question related to NFT, right? That's been a really hot topic, right? So we've seen a reemergence of non-fungible tokens, NFTs. And most are part of Ethereum blockchain, right? So are NFTs just hype, or are they really worth the price, right? So this is kind of interesting question, and I've been asked by multiple people as well, right? So does anyone want to take this question?
I'd like to just start on it, because my interest in NFTs is not the question of whether it's worth it. I don't know if Beeple was worth 69 million or whatever the ridiculous prices that people are getting, but I think it's the potential of NFTs that I want to highlight, because NFTs are also being used to auction for charity, create value for charity. NFTs are creating rights for artists and opportunities for artists to earn money when their works are on sold. And also, I mentioned before about the use of NFTs within gaming, where people are actually earning money by trading these NFTs in gaming. And I actually think gaming is going to be the big adopter, sort of mass adopter for crypto and NFTs, as people are able to move assets in and out of games and use them in other games, and then sort of sell them, whether for crypto or whether for fiat. So I think it's a really interesting area. I also just want to share my own experience, because we're actually trying to do an NFT auction for charity at the moment. And if you're not a crypto expert, because we're trying to get people into this auction who aren't crypto experts, and it's actually really hard to get a wallet, buy Ether, connect to the Rarible platform, bid on the token. And so I think we've got a kind of long way to go in the user experience, and also a long way to go with community education. But I think the promise is there, whether there's value in all of these crazy things that are being sold for a lot of money. I asked that about crypto kitties too, but who knows what people want to buy? You can buy land on Decentraland and people are buying it. So, you know, who knows?
Yeah, I think there's something to be said about generational relevance here, because in the end, NFTs are worth what the next person is willing to pay for it, and clearly it's worth a lot to, I guess, the crypto generation and perhaps the future generation as well. You know, I told you I grew up with video games. If there was an NFT on Transport Tycoon, I probably would buy it. I'd be very proud to own that. So it's really, I think the generational relevance is important, and that's all the more relevant because as future generations come into more means and more capital and more money, they'll invest in these types of assets which they believe in.
Yeah, I think.
Josh, yeah, I was just going to ask you, what are about your perspective? There's something that you
hype. It's all hype. No. It's just funny. One thing about crypto is everything. It's been like 13 years now or so, and it's funny. Like early on, the questions I had were, one, is there going to be any technical issues, you know? And then pretty early, yeah, there were, but they get fixed. So that was like check. Then it was really like worrying about regulatory stuff, like is Bitcoin just going to be completely illegal or what? And I was like, I don't think it will be in America. I feel like it should be okay. And I know people are still thinking about like, how's it going to be? But no, I think that ship has sailed. Crypto is too big and too, like, you know, it's a commodity. You can't outlaw gold or whatever. And the third question I had was, will it get adopted? Like, will it take off? Will it get used? You know? And I think the answer to that is no. But now there's a fourth question that is, does it matter? And the answer to that is also no. It's where because it's like, you know, Bitcoin is supposed to be for payments and all this stuff. And obviously things are getting used in certain ways, but it's like, I don't know. It's just, I've heard it's early days for 13 years, you know, it's early days, institutions are coming, you know, whatever, the governments are coming, like big whales are coming, everything's coming, and it makes the price go up, but it just makes the price go up because there's more people who think it's coming, like the future's coming, it's early days, and more people are like, is it early days? And it's funny, like, you know, Warren Buffett type, you know, he's like, wouldn't touch it, right? Because, you know, he bases all investments on sort of the prediction of future cash flows. And there's no future cash flows, right? Like people, especially early days, what's Bitcoin? What's its intrinsic value, you know? And I think there is a second form of investment that is legitimate that Warren Buffett is not a fan of, that I call collectibles, which are just where you're not predicting future cash flows, you're trying to predict future demand. And they have to be, the definition to be a good collectible is there's a fixed supply or a very limited supply. Because otherwise it doesn't really matter. If you predict the future demand, they're going to make more, and that's going to, you know, make the supply and demand curves keep the price steady or go down. But if the supply is fixed, whether it's gold or, you know, beachfront property or NBA teams or Picassos or Beanie Babies, where the company's, you know, claiming there's a limited supply, you're just trying to predict future demand. And so it's a weird game of just trying to think like, what are people going to want? And the further out you can predict the demand, say like in 100 years, is someone going to still want a Picasso? And you're like, yeah, probably. Yeah, sure. At this point, they're going to still be, you know, and then so, because the actual intrinsic value of a beautiful piece of art, whether it's an NFT or a, you know, Rembrandt, is like, I don't know, you can have a high school student probably paint you a nice, you know, intrinsic value equivalent of a nice painting. It's about that. Like, it's a store of value because I predict that in the future, there's still going to be an NBA and there's only going to be about 30 so teams. So if I own one of them, there's going to be more than 30 billionaires who are interested in basketball in 100 years, I'm thinking, you know? And so anyway, that's sort of how I think about crypto, and NFTs are in that. I actually do, of all this crypto things, think there's something to sort of NFTs, or there could be, because it's just a shame. We've just been recently buying some real art, you know, real art. And I'm figuring out how that game all works. And it's sort of unfair, I think, for digital artists that they don't get to participate in that game, you know, of like building up and we only have 20 of these and whatever. And I'm, you know, doing this new thing in a show because they just do Photoshop art or they do, you know, video art. So it's cool that it's opening that up, I think. But it still comes down to provenance too, because the other part of a collectible is you need to be able to verify it's legit, right? You can't be like, yeah, I bought this Picasso for $52 million. And they're like, that's not a Picasso. And you're like, oh no. So but that's the missing thing with NFTs that I think is a little weird, is because like whenever the physical world is hitting the digital world, like when people are saying like, oh, we're going to put titles, properties, you know, in the blockchain. I'm like, yeah, but at some point there's an oracle, like there's someone saying, yes, okay, that land matches that NFT or that artist, like the Beeple thing. It's like, you're really relying on like a New York Times article saying that Sotheby's said that this token is the one that Beeple says is the NFT, because there's nothing in the token. There's nothing, it's just a, you know, it's just a unique identifier. So that's what's really weird about it. And even rareables and stuff, it's like, you gotta, they do like a Twitter verified, you know, tweet that you're this user. Like that's their way that they're putting in the blockchain that this artist created this thing, is it's like they tweeted it from a blue check mark. And so the whole thing is like not very decentralized and not very like, I don't know, innovative in how they actually do the provenance of art. And also it's ridiculous with gas fees and the difficulty to use it all, but it's early days. So any day now it's going to actually be usable. I don't know.
So I would just jump in and say that, as far as NFTs go for collectibles, I think it's not particularly interesting. I mean, it's an interesting use case, but I think the other panelists have touched on it. Whether it's worth the money or not is you know, up to each person. What I find interesting about NFTs is actually goes way beyond collectibles. And what I'm seeing with a lot of people who are interested in building in our ecosystem, and in particular, there's a lot of demand for NFTs from the real world, from actual businesses who are trying to drive consumer engagement through NFTs. And these aren't in the form of collectibles, but these are in the form of an NFT will represent an actual product or service, some premium product or service that you can only access if you have an NFT. And so what I find, and this kind of goes to Jane's point, which is in the digital world, you're going to see games, you know, a digital sword is like an NFT. So you know there's only 500 of these digital swords, and therefore you know it has value because there's only 500. My daughter plays a game called Roblox obsessively. Probably anyone who has a daughter or son knows about Roblox. And there is no way to know if you paid $100 for a Valkyrie helmet, whether or not that was rare. I know it said rare on the thing, and I know it was a big deal to her, but if that had been an NFT, if I could have tracked how many there were, I think you would start to see a real marketplace develop for some of these digital assets. And so anyway, that's just a long way of saying, I think collectibles and art and people is interesting, but probably for the development of crypto, not going to be a major disruptor. But I do think NFTs as a technology and as it applies to other products and services will be.
Brinley, do you have anything that you would like to contribute?
I think I agree with much of this. I mean, at its core, it's a way to program various rights that attach to whatever this thing is. And that becomes really interesting. Jane, I think you touched on it, right? It can be a way to compensate artists and creators for their work way into the future. And that's really interesting, right? And how we incentivize creativity and all of these things. So I like that aspect of it. In terms of it being early days for 13 years, I do think that actually things are changing in terms of usability. I think many projects are really focused on this. I'm very focused on this, a way to bring this technology that is complex and make it accessible to folks that have never held crypto or have never even downloaded a financial app to their very, modest smartphone. We're seeing that it can happen. And so I am more encouraged on that aspect. I think it's coming.
Thank you, Brinley. So I think I'm going to open up the floor for audiences to ask questions, right? We probably have time for 2 to 3 questions. So Jeff has got a question related to the exchange, the cryptocurrency exchange, right? Who is or are the best current low-cost cryptocurrency exchange to use? Does anyone want to take that question?
So not an endorsement of any one business, but I'd say if you're not trading actively and you have low volume, Robinhood seems free-ish. I've heard good things about the price at Voyager, which is sort of an up-and-coming exchange. I personally use Coinbase mostly because of the liquidity they have, active trading volume that I use. I'd love to hear from others if they have a preference.
So I think it really depends on what you're looking to buy, right? So if you're just buying Bitcoin or something of that nature, Coinbase is probably sufficient. Binance US is actually great for US persons to have access to a much larger list of tokens that you could possibly invest in. So Coinbase has a fairly limited number of tokens that they support. And there are other exchanges that I think do a better job for US persons. If you're not in the US, then I think Binance itself, Binance Global, is just perfect, and not sure why you'd ever need to go anywhere else.
Are the DeFi exchanges, like, I haven't even really used them, like, are they no fee? Are there any no fee ones? Are there any real DeFi exchange where there's no company behind it and it's no fee? Like, it seems like someone would have made that as a real decentralized thing.
Well, but by their nature, so the way exchanges work, you have liquidity pools, and the reason why I participate, for example, in Sushi Swap, I'm a liquidity provider, is because I get to earn trading fees. So the way zero fees and paying money to liquidity providers, I guess.
Well, do you get all the are any of your liquidity, your exchange fees going to, Sushi Swap developers? Is it all going to the liquidity providers? That would be okay. I would consider that zero fee.
That's a good question. I'm not sure how the exchange fees are divvied up between liquidity providers and like some sort of treasury pool for the exchange itself.
Yeah, because that was like, what they're called, Bitfinex started off by doing that same thing. Wasn't decentralized, but you would stake and other people would do margin, and you would get there was a market rate on the interest rate, and it was as high as like 90% annually, and kind of came down as people got more comfortable with it. And then they got hacked and lost 30%, and the interest rate went way back up. That's always the issue, is counterparty risk with all these, even these new like BlockFi and all that stuff, where it's like, they seem pretty good, they raise a lot of VC money, but they can still get hacked. I don't know.
We do have another question that just came in. Is there a true ETF or 401k or pension fund that related that Jeff asked this question, right? That we could start investing. Would that change the game? What would ever happen? Is anyone aware of any crypto ETF or 401k? I guess that's the question.
I think his question was, if a true ETF came out, would that make the price go up? I think that's the question he's asking.
I see. Yeah.
I don't think so, not particularly. At this point, there's so many ways that it's like, GBTC is better than an ETF. It's trading at 10% under. So why don't you buy that and make it? I actually think that, here, this is my advice. I'm not a trading guy, but I'm like 95% sure you will do 10% better than the price of Bitcoin by buying GBTC in the next 6 months, because at some point they do not like their price being below the amount of Bitcoin they have, and they're going to sell Bitcoin. They've even announced, they're like, we are going to make this price go up, people. And they're like, why won't the price go up? They basically have 1,000 Bitcoin, let's say, and yet the trading price of it is 900 Bitcoin. And they're like, we have 1,000 Bitcoin. We're going to sell them and buy our own fund to make the price go up. And everyone's like, we don't believe you. I don't know. So buy GBTC. Normally used to trade at a, you know, that's how they ended up with so much money in Grayscale, was because you could do arbitrage by buying Grayscale and then waiting 6 months or a year, getting converted to GBTC, which was trading at a premium, and you would just sell it, make 10%, 5%, 15%, put it back in and do it again. It finally flipped. Now it's trading at a discount. And so no one's doing that arbitrage now, because you would just lose 10% after 6 months. And so they've got like no money inflowing into them anymore. And so they're like, all hands on deck, let's turn into an ETF and do it. So you could actually, I mean, they have a 2% a year annual fee, but I think you're going to make Bitcoin plus, you know, 10% minus 2% fee if you buy GBTC, which you can do right now in your 401k. And it has a lot of liquidity also. And you can do it with no fees on Robinhood probably, or Schwab or everything. So it's like a negative 10% fee. So you can't beat that.
Awesome. Yeah.
I would just add, actually, so Grayscale has a number of different investment trusts that allow institutions
I believe they have a Horizon trust.
They do have a Horizon investment trust. Just coincidentally, not that I'm throwing that out there, but they do support Horizon that way.
Yeah, that's actually a thing. Like another good here's my hot crypto tips. Buy a bunch of their new trusts, because they don't say it, but in a year or two, they're going to do the same thing they did with GBTC, and they're going to turn it into essentially an ETF, and it's going to trade at a 500% premium. And it's only going to be people who already had bought the real trust and held it for a year. They get to convert it. And so, yeah, you probably just buy, you know, the Decentraland one, the Horizon one, the whatever, 5 of their ones that don't currently trade. There's the GBTC does trade, and the Ethereum one trades, and the Ethereum Classic and the Bitcoin Cash one trade already. And those ones are probably too late, but it's the same thing happens each time, and everyone goes, oh, right, that's what always happens, and I didn't do it again. So maybe it won't happen because everyone now knows, but I'd say it's better than a random crypto investment. At least you're getting this potential boost on top of, you know, especially if it's something, if you think Horizon's going to go up anyway, hey, you might get Horizon plus 500% or something. And custodial issues are gone because they're dealing with it. You don't have any hacking risk. And if you're not really planning on using it and you're just buying it as a collectible, then that's how I would do it.
Yeah.
I have a question. What do you guys recommend for doing the platform? If you can't choose your own coin, if you were going to do an ERC20 type of token today, but you actually want it to work, you want liquidity and you want no gas fees. So is it Uniswap? Is it Sushi Swap? Is it Bitcoin Cash SLP? Is it Cardano? Is it, there's so many, and all of them seem to be like hard to use and have a good good amount of liquidity, pros and cons, or just do it on all of them and just have like Tether and just say, you can withdraw to any blockchain you want. Anybody?
I think I would do it like BitClout. I would spin up my own blockchain, because it's easy to spin up blockchains, and get a group of developers to focus on the scalability aspects. So kind of the BitClout route is how I think I would go. I think.
So, but what about liquid? You also wanted to, because the main thing you want with any new token or any new crypto, right, is like instant liquidity and people trading it, and right. So if you start your whole own blockchain, then you still can get it on Uniswap.
It's like a startup. You would. This is the perfect BitClout playbook, right? So they did a pre-mine, and then distributed a whole bunch. And now, kind of like what you did back in the day with your exchange, there are a couple of, I think there's one's called BitSwap, which has created the 2% on either side exchange. And now they're talking to exchanges to get it listed. It's a full-on end-to-end startup. That's the route they're taking.
All right, I think we're at 7:30 right now, and I'm incredibly grateful to be joined by such amazing group of panelists. I want to thank you all for your time and expertise. Thanks so much for joining us tonight. Have a great one, everyone. We'll see you next time. We'll stay tuned for our next panel event from TCA. Thanks, everyone. Have a great night.
Thanks, Chris.
Thank
everyone.
you. Thanks, everyone. Great panel.
Thank you all.
Great panel.
Thank you all.
Take care.
Woo.